Welcome back to Golden Rule Radio, your weekly recap of the precious metals markets, the news that moves the markets. And we're going to dive right into the technicals of the markets, or the lack thereof, over the last couple weeks, although I do have something on the dollar that we'll get into. So, yes, definitely a little bit boring or a little bit compressy, if you can...
it's a new term. I like it.
Turn compression into
It's been a very
Would that be an adverb?
Adjective.
English major? Adjective?
Yeah.
Okay, thank you. We do have a fair bit of compression across the board and some pennant patterns forming here. So I wouldn't be surprised to see an end of year or obviously January, like we've seen multiple times over the last couple of years, break out one direction or the other. The only thing not following suit is platinum. So we'll look here at the charts quick, but it's important to know that platinum does seem to be doing something the other metals aren't right now. And of course, we're not talking about the black sheep palladium, which hasn't done anything like the other metals for a number of years here.
Yeah, we've had actually a lot of volatility in the last week just within this compressing channel, right? So if you're looking at the gold, you were around 1550 to 1480 or 1540 to 1480,
right.
You talked about in the previous weeks. And now it seems to be like 1510 to 1480, that it's narrowed down. And that goes back like 6 weeks that we haven't really crossed that 1510 mark. I mean, is that something that's telling you we're going to pop up, or are you still thinking we have a chance of going down?
I don't know if there's a way to guarantee a breakout direction on compression. Eventually get to the point you can't flatline on a market. There's going to be activity. So eventually something breaks either the high or the low end of this channel. And then the market as a whole is going to jump into that and continue that trend one direction or the other. So not entirely sure. I mean, we still have those lower prices that we're kind of hoping for. I do often feel like reversals in a market tend to happen pretty quickly, whereas continuations, you tend to see these stall periods, like kind of going upstairs, you got a flat step, and then you take another jump up. So, and the fact that once we hit that mid-1500 mark, we didn't see us pull back to go retest some fib levels or some previous highs back in the 1400s makes me think we could actually be seeing a continuation here, not a reversal. So a few weeks ago when I was hoping and possibly even calling for lower pricing and lower entry points, be aware that once this compression ends, we may not actually see that. You could see price keep pushing up.
Yeah, I agree with that. That's good analysis. You've had just this trading sideways in this range between 1480 and low 1500s. And a lot of people got freaked out by the drop in gold. What was it, down $25 in one day early this week?
But it's still in the channel.
Exactly. It really didn't do anything. If anything, I think it lends credibility to what we're talking about here with the compression, because it just dropped back into the same little area and actually closed higher than the previous lows. So it's still compressing. And now we're moving higher. I think it also corresponds with the equity markets looking like it wants to really reverse from these levels. Could push a little bit higher, but I think you're at a very high probability reversal point with the equities market. We've been in a risk-on market with the equities pushing higher. Safe havens have sold off. And now I think we're ready for that breakout with gold to the north.
Yeah, that's the volatility that I was alluding to. I mean, gold, the $25 at 1510 really is the high we saw, and it dropped all the way to 1482 intraday, and that was a 2% drop, but that was nothing compared to silver, which saw 1818 all the way down to 1738. So that was 4.5% decline. If that was a stock, you talk about people getting unsettled. I mean, that's okay. We're sort of used to that white metal volatility because platinum was the same. It was 4.5% decline, peak to trough in that day, and platinum was 3.4%. So again, a lot of volatility within the channel, which is your guys' key takeaway.
And we should also reiterate the time of year that we're in, because the last 5 or 6 years, the pattern has been that gold starts rising at the end of the year, mid-December, late December, early January. So you've got about a month here to start positioning in metals before I think it heads higher.
I'd also like to point out the reasoning behind a compression, a sideways channel that isn't a defined high and a defined low, but where you have one of those two or both of those two changing price, where you get this sideways triangle or what we call a pennant. I think you can see one of two things, and I think this is where you bring in the question of who's driving the gold market. And I think arguably, or at least the argument we've made over the last couple of years, it has not been the general public, at least here in the U.S., but institutional buying and national buying of precious metals. So, and the reason I bring that up is this. What you can see in these types of pennant patterns, especially where we look at gold here, where you've got a pretty defined floor, a pretty flat floor, but you have a declining ceiling coming down to that flat floor. If that's the general public pushing that price up and down, what you have is you have a whole lot of people willing to defend that defined price floor, but fewer and fewer people, once it gets up there, every time you push up to the top end of that declining channel, you have fewer and fewer people willing to push it higher. So you actually are running out of momentum every time that price turns around. So it's like dropping a ball on the ground, right? Every time it bounces, it only bounces about half as high as it did last time. So that's the type of thing where you'd say, okay, the general public, if the general public's in charge of this market right now, the general public's running out of steam, and eventually they're not going to be able to push the price higher, it's going to fall. So that's one argument about a compression. Now, I think we'd all argue it's not the general public moving the gold market right now.
Totally agree.
So what's the other thing it could be? And it could be this, because you do see this occasionally. What you have is institutional buyers, big money buyers, who are stepping in and cleaning out sell orders at those higher prices. And every time that price goes a little bit higher, you've got institutions willing to step in at a slightly higher price and buy out standing sell orders. So that way, when they're ready to push the price higher, not $10 or $20 or $50, but $150 higher, and they're ready to step in with a big mass order at $14.80, there's nobody at $15.10. There's nobody at $15.25. There's nobody at $15.50. They've already filled all of those orders over the last month. So we could see one of two things happening in the chart right here. Either the general public is in charge and the general public wants the price to go down.
Not possible.
Or we have institutional buyers that are cleaning out sell orders, cleaning out take profit orders with the expectation of us taking that continuation next step up.
You know, I will add that the silver price hasn't really confirmed the gold increase here. Gold has gained back about $10 of yesterday's loss. Silver hasn't proportionally made the same move. So the ratio has moved from 83.5 to 84.5 today. And that's, again, this continual shorting without product in the silver market. So that's where the institutional effect is certainly grand as the paper market drives the price. But we are seeing a lot of physical precious metals activity through our own firm. Yesterday was a cost average day for me where we were stepping in and adding ounces at that $14.82 price point on gold and $17.40 on silver. And I'm not saying that it's necessarily going to hold. That's why we cost average in. Still wouldn't surprise me to see it decline and weaken here a little bit further and break out of that pennant before the end of the year. But that's just my personal subjective opinion.
So glancing briefly at the last couple white metals, palladium, we're going to just move here. We'll flash a chart up on the screen. You all know what it looks like. But moving over to platinum, which is following suit with gold and silver, you do have a little bit of a difference here is we are putting in higher highs and higher lows. So a few months ago, we talked about how gold had led the charge previously in this market move in the beginning stages of this multi-year market cycle. And we said eventually platinum and silver have to turn around and have to start pushing up faster than gold to offset some of these ratios that we're looking at in pricing. So it is possible that platinum could be starting that next switch in emphasis and seeing higher, faster movements in platinum, which we all think has to happen eventually.
Yeah, look at this chart going back to just June, carrying it further out. That's a beautiful upward trend. Quite honestly, that looks very bullish to me.
It doesn't even look like where gold and silver have clearly stalled. Platinum looks like it just took a little correction and is starting its next leg up. So very different looking chart than the other precious metals.
How about the U.S. dollar there, Mr. King Dollar, Robert?
Well, yeah, the dollar's popped back up in the last week and a half and broke above the previous high it created there a couple weeks ago. So could be ready for a bounce back up and trying to shoot for the 100 level What do you think, Miles?
Yeah, we had that nice kind of RSI divergence correction down. We did actually see the dollar put in its first lower low since June. The dollar's only gone up this summer along with the metals, but for some trading reasons, I think we did see the dollar come back down, but it's still in that long-term channel. So I'm with you. I still think we're going to see 100 on the dollar index.
Yeah, and I think some of that dollar strength here recently from the low that it put in is just the expected pause from the Federal Reserve. So the Richmond Fed president said yesterday that, look, let's not talk ourselves into a recession here. He feels like it's really aggressive to be cutting rates further with a 3.5% unemployment rate, and that it's time for us to pause and wait to observe policy impact. So that certainly roiled the markets a little bit, and I think that if they do pause and there is no additional rate cut between now and the end of the year, you could see the dollar rally and go back up. I mean, we were so close, 99.6 on the dollar index, so I think you guys may just see your prediction come true.
Powell testifies next week on Wednesday, and it's one of those meetings where the questions are not pre-scripted. So, those on-the-spot answers sometimes actually create some volatility in the markets. So be watching on Wednesday. We'll be recording that afternoon, but could create some volatility on Wednesday of this coming week.
I think one of the things he's got to mention is the federal debt. That's been something that has been addressed by 3 consecutive Federal Reserve chairmen now.
But wait, that's not his job.
No, that's why. It's his opportunity to fire back at the administration. So you get a little ping pong game going. But, we just crossed $23 trillion officially in the federal deficit or in the federal debt. Okay, that's $186,000 per taxpayer, and it's 107% of GDP, which is a record. So how much are we going to tolerate this? And I do hope he addresses it, because he's one of the few people that can respectfully admonish the administration and the federal government for its out-of-control spending.
Well, they'll address it. They'll just print money to buy the debt, right? That's what they've been doing. That's
increase their balance sheet. They're the ones that are eating it.
There you go.
If all you have is a hammer, everything is a nail.
Well, let's wrap up here briefly with just a reminder that gold also moves as a result of geopolitics. So, I'm not talking about local politics. We're all already fatigued with elections this year, and we've got a whole year to sit there and tolerate a lot more. But geopolitically, seriously, a lot going on, guys. Ukraine, Syria, Turkey, Iran and its nukes, Venezuela, Mexico. We're still trying to overthrow Maduro in Venezuela, by the way. But go search the updates and see why there's a few more reasons out there that gold's got a floor.
So that's going to do it for Golden Rule Radio this week. We thank you for stopping by. If you liked what you heard, hit the subscribe button, ring the bell, engage in the comments, ask some questions. We may answer them. In the meantime, head on over to our website, McIlvaney.com, Facebook, McIlvaney Financial, Twitter, ICA Gold, or give us a call anytime to discuss your personal portfolio with one of our advisors. 1-800-525-9556.
Thanks for listening. Have a great week.